The trading strategy with RSI is very different from all these others. I don't use overbought levels like many do because it doesn't work. What should really triple my balance today is RSI Divergence, but you must also use it wisely. I am immediately preparing to open my first trade, and I will tell you honestly, if you didn't know about RSI Divergence before, you will be completely shocked to find out that such a tool exists. Let me explain the essence of it. I use the classic RSI indicator with standard settings, but there is one small nuance. Pay attention to the price on the chart recently. You can clearly see that the price is rising. However, if we look at the RSI indicator, it is not only not rising, it is actually falling. Thus, the price is rising while the indicator is falling. This is called divergence. That is, there is a discrepancy between the price on the chart and the price on the oscillator. If you see a falling RSI with a rising chart, it only means one thing: the price is gradually running out of strength. This can be noticed with the naked eye, right? Just look at how aggressive the trend was here and how much calmer it becomes in this part. The chart will always follow the indicator. So we open a position for a decline and just wait. I will explain everything in more detail later. Well, great. Soon, 2 trades will close in profit and bring me a considerable profit already today. My goal is to increase the balance to at least 2,000 or 3,000, and everything has played out perfectly here. We can move on to the next trading situation. Many beginners would make a huge number of mistakes here because seeing overbought conditions on RSI, they would already start entering the market for a decline, trying to trade down and waiting for the indicator to start falling. The indicator may fall, but the chart continues to rise. And this is the main trap that most traders fall into. Right now, we are observing a decrease in price. We are near a horizontal level, and I will try to open my first trade for an increase here. All of this combined with RSI divergence, because here, as you can see, our chart has updated its last minimum value, meaning it is moving down further to this point, while the RSI price is moving up. This situation is textbook perfect, and you can refer to a more schematic drawing where the price updates its minimum while the RSI does not. Thus, the price will strictly follow the RSI. Therefore, if RSI is rising, then sooner or later the market will also reverse, and we are betting on that. In other words, RSI primarily shows us that the market is running out of strength to continue this aggressive downward trend. There is always an aggressive phase of a trend and trend's attenuation phase. And right now, this attenuation phase is occurring because the seller no longer has enough strength. Moreover, we are near an important level. So predicting an upward movement from here is very easy. Well, I decided to enter a trade for a decline. Here we have a very simple situation. As you can see, the market price is rising while the RSI continues to move downward. Also, friends, there's a very important point. Pay attention to it. The time for one Japanese candlestick is 30 seconds, while the duration of one trade is 1 minute. Let me explain. The thing is, the market needs some time to start moving in the line with the RSI. So you can trade on any time frame. But the most important thing is that your trade duration should be 2 or 3 times longer than the duration of one candlestick, because the market may not reverse immediately, but rather take some time. This means that your trade should be slightly longer than usual. There hasn't been any noticeable decline yet, so I continue to trade downwards. It seems that the market is starting to show a real recovery. Meanwhile, the RSI indicator has been rising for quite some time, but the market continues to fall. Therefore, this is a risk. This trade carries more significant risk than the previous ones. but I want to take the risk and open a position for an increase here. For some reason, I feel that the price should eventually return to this broken level, which was very important even on the 5-minute time frame. As you can see, I always look at global levels, and I wouldn't open the trade here under normal circumstances, but something tells me that a new wave of growth should happen now, especially these two Japanese candlesticks with long lower shadows signal a forthcoming price increase. Great, this position was short, but it still brought me a profit. This is potentially interesting situation for me. The market is already showing actual decline. So in 2 seconds, I will enter a position for a decrease. But for 2 minutes, since my time frame is 1 minute, keep this in mind. The market has just started showing a decline in line with the RSI indicator. Although before that, we had aggressive growth that did not correspond to all the growth on the indicator. So I hope that the declines will continue now. Well, it seems to me that our trading session will end in 2 seconds. My balance is close to $3,000. By the way, this is a real balance. Don't think that I'm hiding something or editing anything. Overall, my goal for today's video has been achieved. I am turning $1,000 into nearly 200% increase in my balance while trading with moderate risk. If you want to join my live trading session today, you can subscribe to my Telegram channel via the link in the description and either manually or automatically copy my signals. And I also strongly recommend that you test this strategy in practice, because if you watch this video and don't do anything afterward, it means you're just, wasting your time. So thank you all for watching this video and see you soon.